All right, let's do it. Welcome back to the channel. I'm Dee, this is Market Stalkers, and today let's discuss trend lines. Many people use them with varying degrees of success, but are they really a valid trading tool or just kind of wishful thinking on behalf of small retail traders grasping at straws? And if you are one of the traders who use trend lines, have you ever wondered if you're using them the right way? Is there such a thing as a valid versus invalid trend line rather than, the usual conditions, just like trend line broken? If you want to kill the next 10 minutes or so and perhaps even find out a thing or two that you may not have heard about trend lines before, then keep watching. Before I get into this, I'm going to say that I'm a systematic manual trader who also writes algorithms. So from that standpoint, I'm actually very uncomfortable with any trading tool that cannot be properly quantified with just simple code. So that's the first thing to realize about trend lines. They are very, very discretionary. But if you're just a manual trader, especially someone who is looking for a better way to determine a larger time frame trend, then at some point in your journey, it's probably a good thing to attempt using trend lines as a supportive factor. While there's no one single correct way to draw trend lines, there are a few things to keep in mind if you want to maximize results. Number one is to use trend lines on larger time frames. So things like daily and weekly charts. I've seen people who go to a 5-minute chart, drag a trend line on, and they're like, boom, yes, I've got a trend line. And then, a day later, they're like, oh my God, this doesn't work. Of course it doesn't work. 5-minute charts don't have enough trading information to be relevant, nor do they provide enough time for those people who have deep pockets, institutional traders, to plow into any sort of a position. Second point I want to make, a valid trend line must have at least 3 touches to be valid. So if you get something like this is not a valid trend line. Why? It's because it only has 1 touch. So if you count from the first one, you need to have 3 touches. 1, 2, 3. And why? It's because you need to have a trend line that is respected for quite a long period of time. That's what makes it strong. So if you're on a daily or weekly charts, seeing a trend line that seems to be reactive for the good part of the year, that's a strong trend line to reference. The third point I'm making is that trend lines don't have to go just from low to low or high to high. You can also use a mix of, let's say, low price as a starting point and then open and close prices, candle bodies for trend lines, right? So let me show you what I mean. This would be a valid trend line. Ultimately, when we come to any trend line based strategies, is that you'll be looking for the close above or below the trend line, as well as what the next candle looks like. So for example, if you pair up developing price action with trend lines, rather than just using, one single candle to determine whether the trend line is breaking or not, you can see that here, you're actually looking at a reversal candle pattern. So this is an inside bar, a bullish inside bar. The next thing to keep in mind is how steep is the trend line, because very steep trend lines are not good trend lines. And what does it mean when I say very steep? Let's quantify that. So any trend line that has more than a 45-degree angle is very steep. So, for example, this, very steep. It implies kind of like a harsh sort of V-shaped pendulum moves that rarely go on for very long periods of time. So they're unreliable. Therefore, basing your trading and your entries on like super steep trend lines, it's not going to end well. Okay, so now that we know what makes a valid trend line versus invalid trend line, let's have a look at how you can pair this up with some other factors. But before I go on, I'm going to ask you to click the like button for the YouTube algorithm, but also because it takes me a bloody long time to make these videos for you, so it's nice to know whether you're finding the videos useful or not. And clicking a like doesn't cost anything, but it helps our channel to be found by others who are also on this very difficult path of learning how to trade consistently and profitably. And then another completely free way to help our channel is to watch the ads in full. I know it's such a drag, but who doesn't like seeing Greg Secker trying to teach his gardener how to trade, or that woman with the lighting umbrella telling everyone how easy it is to make money in crypto. Anyways, if you want to go yet another step further to support us, you can always sign up to our Patreon. Over there, you're going to find some lifestyle-related content, but also some trading stuff too. Reruns of previous Q&As, upcoming Q&As. You'll find anything from me cooking like keto and low-carb recipes, gym workout videos, and downloadable workout plans. Obviously, when I'm not in lockdown, because London is still in lockdown indefinitely. All the links are down below in the description box.
Back to the trend lines.
Going back to the chart just earlier, this is a spot gold chart, daily time frame. So I have this trend line here, and while it's sort of steep, it's just about sub that 45-degree angle. So it's not like some kind of a mountain peak going like a rocket. And you can also see that I'm not using ultimate highs and lows, but instead I've sort of moved it around to get the most touches. And I think I can count, so let's see, 1, 2, 3, 4, 5, so at least 5 touches, maybe 6 or 7. So that's, that's the super discretionary part. You can't really code for this. It's purely a visual human trader tool. So from that point of view, it's not useless, it's not something you can easily quantify. And now let me draw your attention to this area here. Now this is when the trend started to slow down. Even though if you're using like supply and demand with my weekly Q points, you would have identified a market turn, quite early on. So if I switch on the Blahtech backtest mode and go here, you'll see that the market starts to create Q points. And then if I switch on my daily Q points, you will see that there was a supply here. So let me mark that for you. So that's a supply. I'm gonna zoom in. So if you're using, my Q points and supply and demand, you already would have identified a market turn already at this daily Q high test of supply. So there was this consolidation and one of the candles having a very large selling wick. That's a sign. It's a sign of some kind of a rejection. If I then drop down a time frame, so now we're on a 4-hour chart looking at the daily Q points, and in fact I can put the daily supplies as well, so here it is. You will notice that there is a bearish engulfing as a rejection from the daily Q high. So already there's something going on and that the uptrend is no longer that strong. But we're not talking about supply and demand here, only trend lines. So let's go back up to that daily chart, just to zoom out a bit so you can see the entire trend line. And I'm going to remove all of these supplies just so we can, really hone in on what's going on here. Once the trend has started to slow down, you start getting this like more of a congestion. The price keeps dancing along the trend line, seemingly rejecting it, but never really moving the price back away from the trend line until we finally get to this point. And the price finally prints a rejection pattern to the other side away from the trend line. So look at the difference. So here it's printing a morning star, which is a bullish signal. And there's like a whole cluster of candles. This is sideways action basically. But it's not until the bearish engulfing post-consolidation finally breaks away from that trend line and the market then starts to fall. This is when the trend line is truly broken. Only when you get that definitive rejection of the trend line to the other side. And likewise, something to keep in mind is to look at where and how far away does the price close away from that trend line. That's very important. It's not something many people think about. So here's your trend line, 3 touches, 1, 2, 3, and then you get this flimsy close above the trend line. That's not much of a break, is it? This would have been a very painful trade to lose. So let's say you go in and you're like, right, the trend line is broken, I'm going long. And then you open a trade and then you're like 1, 2, 3, 4, like 4 days before the market takes you out. Just because you didn't quantify what constitutes a break from a trend line. But then on the other hand, if you looked for this sort of a pattern away from the trend line, so you see how the bullish engulfing is happening to the other side of the trend line. That was a sign that there's some kind of a change in sentiment, right? And sure, it took a while for this to get going, so this would have been a painful trade as well. And this is because you're trading off trend lines and not swing extremes, but that's a whole different problem. But you still would have had a very profitable trade on your hands. This went on for weeks. And that's exactly why I prefer to have something else rather than, just the trend lines and price action to really tell me if what I'm seeing is really a trend line continuation or a trend break. Now, if I switch on the Blahtech backtest mode and go back to this point where apparently we have a break of a trend line, you will see that we don't actually have any sort of a localized Q point low to justify the break of the trend line. So at this point, it's all just a guess. But if the market kind of continues to move up and down, creating yet another distribution curve that we can use, then a break of a trend line might be relevant. So if I push this further, just putting it into context, you will see that this breakout of the trend line was a fake out. It didn't happen. So the price started to come back to the same trend line yet again, weaving around it, except now we have a daily Q low. So that becomes something to look out for. Therefore, the next time when I get a reversal price action above the trend line, above the previous trend line, that's also coming from a daily Q low and from a weekly demand area, then you have a valid trade. We now have a rejection and a break of that trend line. So now, once we get that rejection of a Q point, look how quickly the trend just starts happening. So obviously, if you're someone who trades things like single stocks, you're a swing trader, looking for clues like these will be a much better way than, using any random trend line on a 5-minute chart. So to recap, what needs to be done? You need to find a trend line with minimum 3 touches. The trend line cannot be super steep. Look for a bounce or a break of trend line via developing price action patterns and use supportive factors. And finally, if you start getting those frequent tests of the trend line where seemingly the price cannot glue itself away from the trend line for any extended period of time, it means the trend is slowing down. So you get that sideways movement, you get congestion for some reason. If that's the case, expect at least a breather and possibly a change in direction. All right, I think I've jabbered at you enough for today, so I'm going to end the video here. Let me know your thoughts down in the comments. Do you use trend lines? Do you know someone who uses them? How is it working out for you? Did you learn anything new today that you didn't know already? And also feel free to share this video with anyone who you think may benefit. Click here for more strategy and indicator overviews, and click here for various trader issues and what you can do about them. Thank you for watching, and I'll see you next time.